What's up guys, welcome to Riti Trade Hub. In this video I'll be teaching you a deep secret about trend trading which the pro traders use to make good trading decisions and make good profits as well. As a matter of fact, most traders fall into these trend trading traps. Okay, trading with the trend in forex trading simply refers to identifying the direction of the market and aligning your trades in that direction. Right, this is considered a more conservative and low risk approach to trading, as you are following the market momentum rather than trying to predict market reversals or trade against the current trend. Right, let's head to the chart. Let me show you practically how to identify the right trend with 90% win rate to enable you trade like the pro traders do. Welcome back guys. There are several ways to identify the trend in the forex market, but for me I like keeping things simple, so I mostly use trend lines. Like you guys know, I am a pure price action trader and I am not a fan of indicators because they are not useful to me when I can clearly see all the information I need to make my trading decision live on the chart in just a few seconds. So with that being said, let's take a look at the trend line and how we can simply use it to make the best trend trading decisions. Okay, firstly, before diving into drawing the trend lines, you need to understand that the market is classified into three major types of trend. Okay, we have the uptrend, downtrend, and sideways trend, otherwise known as the consolidation or ranging market. So how do we identify these trends? Okay, an uptrend is indicated, okay, when price is making higher highs and higher lows. Okay, when price is making higher highs and higher lows, higher highs and higher lows. Okay, so let me take it on to this level. Okay, and then how do we identify a downtrend? Right, and a downtrend, right, is indicated when price is making lower lows and lower highs. Okay, lower lows and lower highs. All right, lower lows and lower highs. Right, so this is what a downtrend and this is an uptrend. Now let's proceed to see how we can use the trend line to confirm the direction of a trend. Okay, so a trend line is a straight line that connects two or more price points, and it is used to identify a current trend in the market. Okay, now let's proceed to see how we can use the trend line to confirm the direction of a trend. Okay, so you need to note that in a downtrend you connect the highs. Okay, you connect the highs downwards, right? You connect the highs, these are the highs, right? And then in an uptrend you connect the lows. This is the low here, we have a low here and we have a low, so you connect the lows. Okay, so having identified the lows, okay, we quickly draw a trend line connecting the lows for an uptrend. Okay, we connect the low, so we have a low here. Okay, and then we extend it upwards like this. Okay, we extend it upward like this, right? This is an uptrend. And then for the downtrend, okay, we also draw a trend line connecting the highs of the trend, right, and then extending it downward. Okay, so we have something like this, and this is an indication of an uptrend, while this is a downtrend. Okay, so guys, let's quickly take a look at this on the chart, okay, before we go into the deeper knowledge of this video. So guys, you can see on the screen here we are in a downtrend. Okay, now how am I able to spot this? As like I just said, price is making lower lows, okay, and lower highs, right? Lower low and lower high. Okay, now we had a period of consolidation here, and then price, we had a period of consolidation around here, and then price made lower low here, taking off these lows here. All right, still indicating a downtrend. Okay, now let's take a look at the buy scenario. Right, let's take a look at a buy. Now, so you can clearly see here, right, price took off this previous low. Okay, giving us a new structure, right, at this point, giving us a new structure at this point. So how can we identify that? Clearly we can see that price now failed to form a new low, a new lower low here, but rather formed a higher low, indicating an uptrend. Okay, a higher high, price formed a higher high here, and then gave us a new higher low, right? And then up here we have another higher high, higher low, higher high, higher low, okay, slightly higher high here, and price is still tilting to the upward side. All right, so this is a clear uptrend, and from here we can also see that we had a downtrend. All right, so now let's go ahead and plot our trend line. Okay, remember you're connecting 2 points. Okay, you're connecting two low highs in a downtrend. You're connecting 2 points, right? And as you can see, we have a touch here, we have a touch here, we have a touch here, and also a touch here before price finally broke the trend and the structure around this zone. Okay, and then clearly we can see market started forming a new trend, which is an uptrend like we previously identified. And then what do we do? How do we draw the trend line? You connect the lows. Okay, in an uptrend you connect the lows, in an uptrend you connect the lows, in a downtrend you collect the highs. So I'll just go ahead and pick this from here. Okay, I'll go ahead and pick it, so we can clearly see that the market is in an uptrend, right? And then still seeing that this direction, this market is tweaking the trend, right? Can still see another trend, and there's still an uptrend. We are going to come to this later on. Okay, so now having identified the trend of this market, let's take a look at something deeper than just identifying the trend of the market. And this is what so many traders ignore, and they end up making wrong trading decisions even after identifying the trend of the market. Okay, when trading with trend lines in the forex market, there are several factors to consider. Firstly is the direction of the trend. Okay, so guys, trading in the direction of the trend will greatly enhance your odds of winning. As the saying goes, the trend is your friend. Okay, it's important to identify the direction of the trend and trade in the same direction as the trend, which I have already highlighted the directions of the trend. But the problem here is that majority of traders only identify the direction of the trend and end there, then go ahead in using just that single information to make their trading decisions, and when they end up losing, they conclude that the market was being manipulated, whereas they fail to consider other important factors that need to be considered when trading with the trend. So having identified the direction of the trend, so now you know that you need to trade in the direction of the trend. Okay, now another factor to consider is the slope of the trend. Okay, a steep slope may indicate a strong trend, while a shallow slope may indicate a weak trend. Now the slope of the trend line can be positive, negative, or neutral. A positive slope indicates an uptrend where prices are generally increasing, and the steeper the slope, the stronger the uptrend. Okay, and then a negative slope indicates a downtrend where prices are generally decreasing. All right, the steeper the slope, the stronger the downtrend. And a neutral slope or a flat trend line indicates a range bound market where prices are not trending in any particular direction. Now let's quickly take a look at the chart so we can have a look at some steep trend. Okay, so here on the GBP USD, okay, let me take this off. Still on the GBP USD, right, we have a steep trend here. Okay, so as you can clearly see, price started trading closer to the trend line, right? So the bulls are losing momentum at this point, okay, failing to push the price higher, which is indicating that this trend line may likely not hold at the third bounce. Okay, now as you can see, price clearly broke the trend at this bounce, right, and then failed to take off this structure. Okay, still indicating that we are still in an uptrend. All right, price failed to take off this structure and we are still in an uptrend. You need to understand that the break of trend is not always a change of trend. Don't worry, as we proceed, I'm going to explain this. I'm going to elaborate on this. Okay, break of trend is not always a change of trend. So as we can see, price continues to the upside. All right, so guys, let's take a look at a healthy trend. Okay, just like we saw previously, I was still on this zone, right? Now a healthy trend is not steep and have chances to be respected multiple times. All right, just as we identified earlier, right, here is a down trend. So let's quickly have an overview of a healthy trend. Okay, we clearly spotted out this downtrend when we started off this video earlier, right? So here we have a downtrend. Okay, so as we can see here, okay, price respected this trend multiple times, right, at these zones. Price respected this trend multiple times before finally, breaking out from the trend, unlike the steep trend that we saw, okay, the trend with the steep slope. Okay, so this is another factor you need to consider when identifying your trend line, or when trading in the direction of the trend. You need to identify the slope of the trend. Okay, so guys, when using trend line to determine your trend direction, you need to note the number of touches. Okay, a trend line that has been touched multiple times may be more reliable than one that has only been touched once. You also need to note the support and resistance levels. All right, trend line can also act as support and resistance level, and these levels can be used to enter or exit your trades. Okay, so knowing the slope of the trend will guide you to know the strength and the lifespan of the current trend you are trading. Okay, so guys, moving on, another factor to consider is trend breakout and confirmation. Okay, a breakout above or below a trend line can indicate change in trend. Okay, you know, like I said earlier, that a break of trend does not necessarily mean a change of trend, and I said I was going to explain in detail. So guys, here is the details. Okay, a breakout above or below a trend can indicate a change in trend, but this should be confirmed with other technical or fundamental analysis. So what do I mean? Okay, so guys, you can see on the chart, okay, my network is just slow today. So as you can see here, we have an uptrend right here. Okay, now we see a break of trend, a clear break of trend, but then price failed to take off the previous structure we have around this zone. Okay, and then moving on to the left, you can see that this zone is valid, right? It serves as resistance and as support. Price failed to break this zone, and then we have price reacting at this zone, like candlestick reaction at this zone, like kind of a rejection. Okay, now guys, this is where most traders get it wrong. This is what I mean, that a change of trend does not mean a change of structure. Okay, most traders take break of trend to be trend reversal. So once they identify a break of trend, they start looking for trades in the opposite direction without considering other factors that validate trend reversal, like break of major key levels like I have identified here. Okay, or break of previous trend structure, just like this structure. This is the previous structure. Okay, so guys, this is what I mean, that a break of trend does not necessarily mean a change of trend. Okay, as you can clearly see here, price have broken the trend but did not take off the structure. So guys, from what you can see here, okay, whenever there is a break of trend, you need to use other extra confluences, technical analysis, okay, to confirm if the trend reversal is valid. Okay, but from here we can see a clear break of trend, but price failed to take off this structure. There is a double bottom at this place, at this zone. There is a double bottom at this zone. There are candlestick rejection at this zone, and if you scale down to a lower time frame, you are going to see more extra confluences to enter into this trade. Okay, so guys, whenever you see a momentum break of trend, okay, the only way you can validate the change of trend is when price takes off the previous structure of the previous trend. All right, the previous structure or the last structure of the previous trend. As you can see here, we can see that there is a trend. The last structure of this trend is around this zone. Okay, now the only way we can validate this break of trend here is if price takes off this structure, right, takes off this last structure low, takes it off, right, then pulling back to this zone, or you can use your Fibonacci retracement to see the zones where price, or the levels where price reacts to, and then that is the only way we can validate the short position, giving us a new lower high. All right, and that way we can now validate the sell. Let's say the Fibonacci gives us a confirmation around this zone, or let's say around this zone, right, and then we are shorting probably to somewhere around here, pull back, and then we are all the way down. That is the only way, okay, to validate this short, or to validate the trend reversal or change of trend. So guys, it's important to keep in mind that trend lines are just one tool in a trader's toolbox and should be used in conjunction with other technical and fundamental analysis, just like I have mentioned. So it's a term I refer to as confluence. Okay, as a trader, you need to have several confluences to help you validate your trading decisions. Okay, so one other important aspect to consider when trading with the trend is to pay attention to market volatility, as it can help you to also identify the strength of the trend. Basically, a strong trend is usually characterized by high volatility and a weak trend by low volatility. So be keen to know when trend is dying off. Okay, I usually teach all of these in my mentorship program: how to spot when trend momentum is dying off, how to spot reversals, and so on. Okay, so guys, while trading with the trend can be a low risk trading approach, you should always use proper risk management techniques to protect your account, because price can change direction at any time. Okay, in summary guys, trading with the trend in forex trading involves identifying the direction of the market and aligning your trades in that direction, using trend following strategies, stop loss and take profit order, and also to be aware of market volatility and external factors that can affect the trend. Okay, if you have not subscribed to this channel, go ahead and hit the subscribe button now and turn on post notification bell so that you don't have to miss any of my valuable content. But wait, how can you watch this video and not subscribe to this channel? Please go ahead, hit the subscribe button so I can get inspired to drop more content that will help you in the forex market. Okay, thank you for watching, and I'll see you in my next video.